Hi, this is Steven Rivera with Mortgage Mondays. So now that your loan officer lowered your risk, the next step is choosing a loan program that best fits you. All right, and now it comes down to what your credit and your credit score and your DTI are. This is why I said let's work on this before all of this. But let's go over some pros and cons for programs that are available for you, starting with the basics. What is FHA? Steve, what is it? Well, FHA stands for the Federal Housing Administration. All right, now FHA mortgages issued by an FHA approved lender, AFN, and is insured by the Federal Housing Administration. All right, now FHA loans were designed for low to moderate income borrowers, which you'll see why in a few. Step on the other side to conventional loans. Now, conventional loan is not part of any specific government program. Basically, anything not FHA, conventional, or USDA. Now, these loans follow guidelines set in place by Fannie Mae and Freddie Mac, which I'll explain in a whole nother video. But let's go over the pros and cons. Starting with number one, credit score. Now, FHA allows a minimum credit score of 580. That's right, 580 credit score. If you almost have a 580, talk to me. We could go ahead and boost it up so that you can meet the requirements. There are some cases where you could qualify with under a 580 credit score, but why would you want to? Not a smart idea in my opinion. Step on the other side of conventional. Conventional allows you to go a minimum of 620 credit score, but it is a little more difficult to qualify. Therefore, I recommend a 640 when you're going conventional. 640 credit score when you're going conventional. Number two, what's the difference between down payment, Steve? Easy, I'll explain. FHA loans have a major advantage for those who don't have the money for a large down payment. FHA allows 3.5% down payment with a minimum of 580. Well, you remember I was talking about under a 580 credit score. FHA does allow that, but you have to come up with a 10% down payment if you're under a 580 credit score, which is why I said, why would you want to? Now, FHA also allows you, this is big, to use gift funds for 100% of the down payment. This is why a lot of first-time home buyers choose this program and take advantage, because what they do is take advantage of the down payment assistance programs that gift you the funds for the down payment. So FHA allows that. Now conventional, let's go to conventional. They go as low as 3% down, but typically the down payment on a conventional is 5%, slightly higher than FHA. And also, conventional mortgages typically don't allow the down payment to come from anyone else but the borrower. So that's a slight disadvantage. Now DTI, let's talk about DTI. Number three, DTI. FHA, when it comes to DTI, allow up to 50%. Now in some cases, I have seen it jump up to 55%. I would caution when using those high DTIs, because why? What happens, you find a house and your taxes and your insurance are skyrocketing. That's going to send that DTI too high for you to qualify. You don't want that. Now with conventional, it is a little more strict when it comes to DTI. You do want to stay at 50% or under. Preferably you want to be at 45% when it comes to conventional mortgages. All right. Number four, mortgage insurance. Let's talk about mortgage insurance. What's the difference, Steve? Well, mortgage insurance with FHA does require mortgage insurance premium, or MIP in other words. And these MIP fees vary, but it's typically 0.85% of the loan amount. Now, conventional loan is different. Essentially the same thing. It's what's called private mortgage insurance, or PMI. What everyone knows is PMI. And with PMI, you only are responsible for PMI with conventional if you put less than 20% down, which means anything over 20% or 20% or over, you don't have to worry about PMI. You kick that thing right out. See you later, alligator. Now, with PMI, it's usually 0.5% of the loan amount with conventional. And last, let's talk about loan limits, guys. In 2020, FHA did increase the loan limit to $331,760 for a one unit single family home in a low cost area. And with a high cost area, looking at $765,600 for a single unit in a high cost area. Now with conventional, their limits were also raised in 2020 to $510,400 for a 1 unit single family in a low cost area. The high cost area is the same as FHA, $765,600. So there you have it, guys. When comparing FHA and conventional, keep in mind there is no right and wrong. There is no what is better and what is not, which is better, FHA or conventional. Okay, both mortgages have their advantages and their disadvantages. Both have their pros and their cons. An FHA home loan might work for this borrower, might be great for this borrower, but the next one not so much. Okay, so before choosing your program, weigh out your options, check which one best suits you, and definitely speak over it or speak to your loan officer in regards to that. All right, I'm hoping and I know that this video is going to benefit somebody. I hope it did. Please like and share, and stay tuned in for next week's episode where I'll talk about step number 3 in the home buying process. My name's Steven Rivera, and that's this week's Mortgage Monday.